Hi, welcome to this video, which is all about best Forex trading tips for beginners in terms of achieving Forex trading success. Now, in terms of the best, or one of the best tips I could give a beginner coming in the markets is go and read the classic trading book from millionaire turtle trader Curtis Faith. The book is called Trading Instincts. I'm going to go through the key lessons you can learn from the book in this video, but get it on Amazon for under $10. Now, in terms of the book, it basically gives you how to develop a trading strategy with an edge and build a rule set. It will also teach you how to get an instinctive feel for trading the chart as well. So combine your instincts with your rules. It gives you great insight on the right mindset and the psychology that is needed to win. Just one of the best trading books I've ever read, actually. Now, in terms of, we're going to go and review the key lessons from the book in just a moment. Also, after I've done that, we are going to just play out with our favourite quotes from Curtis Faith, which I think are very educational, motivational, and inspirational. Just before we go to the lessons, though, if you would like more Forex info, all our best books, best trading strategies that work, best trade setups, you can just simply join our free mailing list on the link beneath this video. Right, let's go take a look at the key lessons from the book Trading Instincts. All right, let's have a look at some lessons from Curtis Faith's book Trading Instincts. But just before we do that, I just want to give some background to Curtis Faith and also another excellent book that he's written, which is called The Way of the Turtle. Now, in terms of Curtis Faith, why he became famous within the trading community is due to the Turtle Trading Program, which obviously The Way of the Turtle book is about. Now, in terms of what is the Turtle Trading Program, or was the Turtle Trading Program, just for new viewers or anyone unfamiliar with the program, just want to go through it very briefly. It was devised by Richard Dennis. He was a trading legend at the time, very successful trader, and he decided he could teach anyone to trade quickly regardless of age, educational background, or profession. So they got a group of people together, no trading experience, all diverse backgrounds, and he taught them a strategy in 2 weeks. Now, in terms of the strategy, they learnt it in 2 weeks. They were then given money to trade, and all the turtles were very successful. They all compounded over 100% per annum, and they made Dennis several $100 million. Curtis Faith was the top performing turtle, making I think it was $45 million. Now, in terms of the turtle trading strategy, it will not work today. The markets have changed. Okay, they were extremely volatile when the strategy was being traded. And the strategy relied on catching those really big trends with very little in the way of pullbacks. Don't get so many of them today. But the basics of a successful trading strategy can be learned from the turtles. Okay, now the rules and why the system is successful or was successful, you can read in The Way of the Turtle, but they're public knowledge today. There's PDF in our PDF download section going through all the rules and why the strategy was successful. But in terms of any strategy that is successful, there's 4 key points that they all have in common. The first is, anyone with a successful trading strategy trades with an edge. Now, when I say trade with an edge, I mean they know why they're going to win longer term. They have researched that edge against market movement, how markets really move, okay? And they have rock solid confidence in the edge. Now, you might think, well, that should be a pretty obvious thing for any trader to do. No. If you ask most Forex traders, what is your edge? Why are you going to win when the majority fail? Yeah, it's a competitive industry. Why are you going to win? They look at you blankly. They haven't got an edge at all, okay? Or they'll say they've got an edge, and as soon as you hear what they say, you know they haven't researched the edge. And what I mean by that is It's my favorite example. Pattern traders or traders who use predictive strategies. Just taking it off the net or taking someone's word that it works, haven't done the research. Obviously, pattern trading strategies do not work if you understand how markets move. They haven't done their research, okay? Now, in terms of, obviously, you've got to manage risk, haven't you? All great strategies have good risk management. And I think in terms of this, yes, it's conventional wisdom, but most traders, again, take too much risk. And yeah, we've always said here, you do not need to take much risk in terms of your trading to make really good gains. Okay, now take the turtles, only risk 0.5% per trade, but look at the money they made, huge amounts. But you get traders who will risk 10 or 20% on a trade. They don't understand risk of ruin. Okay, I've done videos on what is the optimal risk level to take. You look them up, it's a lot less than most traders think. Yeah, if you're aiming for bigger gains in the market, I would say aim for at least 100 pips, 500 pips or more. You use small size. Yeah, if you're looking to make 30 or 50 pips, you're going to use big size. You're going to lose because your winners are never going to cover your losers, okay? Obviously, I've discussed this in other videos, but yeah, your risk exposure should not be too big. Consistent application of the edge to maximize the edge. We think, well, that's pretty obvious advice as well, isn't it? It is obvious advice. However, if you don't really have a trading edge, well, you're basically going to lose confidence as soon as you lose a few trades. And if you basically not research the edge, of course you could lose confidence. Pattern trader suddenly starts to lose. Might want to tweak his strategy or find another pattern trading strategy. He's lost confidence. Well, you've got to understand why the edge will prevail. Otherwise, of course, you can lose confidence. Now, to give you an example, I know exactly why I'm winning in the markets and why I'm losing. I'm going to lose if the volatility drops down. Okay, there isn't much volatility around. I'm not going to make money. I'm going to make money in high volatility. So I know why I'm losing, why I'm winning. I know over time I will catch the volatile moves and the strategy edge will prevail. So I can follow the strategy with discipline. Okay, if you don't follow a strategy with discipline, you don't have a strategy, do you? So people who tweak their strategy rules when they're losing, it's not going to work. And most traders, when they start trading, not most, but a big percentage will hop between strategies. They think there's something wrong with the strategy, they must go and find another one. It's just the cycle of doom. Okay, now in terms of any strategy, keep it simple. You look at a lot of traders, their strategies are way too complicated in terms of what they're looking at on the chart. There is a sort of view that advanced trading strategies work. I think that's laughable. They don't. It's like George Soros says, any trading strategy that is successful is going to be very, very simple. The more inputs you have, the more prone your strategy is to breaking. Okay, let's keep it simple. Now, 4 basics of a successful strategy. Now, that was hard to follow, that strategy, even though it worked. Why? Because of human emotion and cognitive biases. Now, cognitive biases, they're emotion, very different to instincts, which I'm going to come to in a moment. Now, in terms of cognitive biases, most traders cannot overcome them. Okay, most traders do not even know the main cognitive biases, why they cause them to lose. If they did, then they'd be able to overcome them. So, for example, outcome bias, confirmation bias, mental inertia, frequency bias, sunk cost fallacy. Are you familiar with those biases? If you're not, then you should be. Faith does a fantastic overview of all of them, how they impact on your trading and how you combat them. Okay, because they're all basically, cognitive bias is going to work against you in terms of following a strategy with discipline, tempt you to run losses and tempt you to cut profits early. Okay, so you need to be aware of them. I've done videos on all the cognitive biases. Faith does a really great overview of them. Now, in terms of trading instincts, very important in today's markets. Now, as Faith said, he started off as a rule-based system trader on the Turtle trading program. But he said as the markets have evolved over the years, more noisy, intuition is really needed in terms of having rules, but having the flexibility to use your intuition. Okay, now in terms of most traders or beginners coming to the markets, they're left brain dominant. Right brain is neglected. What do I mean by that? Well, you've got two sides to the brain. The left side of the brain is very focused on logical order, finding conclusions with set ways. I mean, a good example would be, if you were to fix a car engine, you'll go through certain steps, find out the problem, and then you fix the engine. Everything is kind of set. You can go through a logical deduction process and get a result. Most traders who come in the market want to do that. They want to see order, and they want to have set rules, and they want to win. However, today's market, that is not going to work. Most traders will be most successful traders will be right brain dominant today, not left brain dominant. What does the right brain do? The right brain is basically storing everything you've ever learnt in your life. It sees the really big picture, and you don't think in terms of the right brain. The left brain will think and go through a logical deduction process. The right brain makes lightning quick decisions, and it doesn't very often tell you why it made those decisions or gave you that gut feeling. Now, everyone's had this probably. You have a gut feeling that something is wrong and something is wrong, but you didn't know why you had that feeling. That's the right brain. Okay, right brain is there for survival. It's a lightning fast computer, contains everything you've experienced or learnt in your life. Okay, now it's neglected by most traders, but intuition is the key to trading success. You have set rules, but you need the flexibility of intuition to read the tape. What I mean by that is, Forex markets are not a logical deductive process. Okay, it's not like fixing a car engine. You need to have experience of reading the tape, and then you get an intuitive feel of what price is going to do. Most successful traders I know will probably be reading a maximum of 15 candles right, how those candles are flowing, okay, to get a real feel for the price and what traders are going to do next. And that will be seen within the context of the whole chart, the big levels, okay? So I think a good way of explaining this would be perhaps comparing, making a comparison with chess. Chess players, when they sit down, they know that every game is going to be different. There's going to be infinite different outcomes, or there are infinite different outcomes to games of chess. But chess is a simple game, and they can see how the pieces are moving in the short term, see the overall big snapshot of the board, play the game simply. They know what to do in a huge amount of different situations. All situations on the chessboard are different. All trading charts are subtly different as well. So basically you need to get an intuitive feel. You'll have rules as well, obviously, but flexibility within those rules. Now, in terms of building up your intuition, I'll come back to that in a moment. But in terms of how markets really work, a lot of traders do not do enough research on this. They're basically emergent systems. If you don't know what emergent systems are, Faith does a really good description of an emergent system and why the markets are I've done videos on this subject as well. You're dealing in probabilities, you're not dealing with certainties, you're dealing with a market that can do anything. But if you understand inertia, cycles, momentum, greed, and fear in terms of the markets, then you've got a good basis for basically building a strategy. Now, in terms of what is the best way of trading for retail traders, Faith makes the point swing trading is the best method. It is. Now, you can long-term trend follow, but long-term trend following can be hard for most traders because you have to give the market room. So you have good sized drawdowns. You've got to hold for the longer term when you've got big profits when you're tempted to snatch them in. You're also going to lose the majority of your trades, just like the turtles did. Very hard emotionally for traders to do long-term trend following. Well, the majority of traders, it suits some people. I think swing trading is a good way of trading because you've got shorter moves you're focused on. So if you're swing trading, you might get a trade come right in a day, but normally you're holding for around 2 to 7 days. I've ignored day trading. Day trading, alas, doesn't work for retail traders. You're just trading noise, so that should be totally avoided. Swing trading is the way to go, in my view. And Faith gives a very good swing trading system which you can adapt and make your own. It's called the Rebound Swing Trading System. He describes how you use set rules, but how you use your instincts in relation to applying the strategy. We use a variation of it here. It's really, really good. Anyone can make it their own. I think it's fantastic. And I think it was Dr. Van Tharp was saying the same. Really good. Okay, so you get a really good ready-made system as well. How to train and trust your instincts. Faith goes a lot into this. He does say that what you really want to do is it goes through the step-by-step process in relation to this. You've got to be very fast when you look at a chart. Do not think about it. Make your decision quickly. If you focus on speed, you'll also be focused on simplicity. And there is no need to think about a chart. Any trader who thinks about a chart is either just coming in the markets or really hasn't got a simple strategy that they trust. Speed and simplicity. Thinking about a chart, it's either you're overcomplicating things, you're wanting to see a trade setup that might not be there. No place in Forex trading or any type of trading you should be able to look at a chart, decide what to do instantly. That is it. Okay. Now, in terms of training your instincts, and obviously this is just a brief overview. Faith really goes into this in detail in terms of how the brain works, etc. It's going to take a little bit of time for you to learn to read the tape and trust your instincts. And I would say most traders going to take at least 6 months, maybe a year or more. You're building up your experience, and your right brain will then really, really start to help you make the right trading decisions and also make money. Right. It's a great book. Less than $10 on Amazon. Go and read it. Now what I'm going to do is I'm going to finish up with my favourite quotes from Curtis Faith for trading success. Thank you for watching this video as per usual. Take care and have a good day.